I've confirmed it. The board meeting just ended. I'm told it was not a contentious board meeting. Adam Neumann stepping down as CEO. He will be replaced on an interim basis by Sebastian Guggenheim and Artie Minson, two people that have been at WeWork for a little while. At this point, Adam will stay on as non-executive chairman, so he will not be removed completely from leadership.
And he still owns the stock. He still owns the company, controls it, controls the board even that's making these decisions.
That's right. So you'd have to imagine he sort of saw the writing on the wall here. We've reported in the past 48 hours that SoftBank had been pushing for this. SoftBank, by far the largest external shareholder in WeWork. So I think Adam sat down at the board meeting, figured out what the temperature was.
Right.
Probably figured out what the temperature was now for days.
Because even though he controls the company, in effect, SoftBank does as well. I mean, they own so much of it, and their involvement is key to this IPO.
And obviously, this is all tied toward the last several weeks of this company trying to go public.
Right.
The valuation not being there to go public, and both potential investors in the company and the current investors may be realizing that with the way the company was run from a corporate governance standpoint, a change needed to be made if this company does want to go public down the road.
And Kate, it's interesting to note how SoftBank's trying to, we went from the headlines of them kind of propping up the IPO to them getting cold feet and saying, wait, we need some changes here so that we feel comfortable with this moving forward.
Right, and if they go forward with it, and we're not clear on exactly when that'll happen, there are some clauses Renaissance Capital found on about the 115th page of their S1 that they had a clause that would protect them from some downside, which it's called a ratchet, and it's common, and Square used it. It happened in Chegg's IPO, but this would be the largest in history because the difference between the valuation that SoftBank had, which was $47 billion, versus where the demand is for the IPO, that valley is so wide that if they were to get this protection, it would end up being the biggest. They're estimating 400 million in additional shares that would go to SoftBank.
So because the valuation's so low, it kicks in a whole other allocation to them,
right? And
which gives them more ownership, but again, a diluted point of view.
Still, to be very clear, this was clearly not the plan when WeWork wanted to IPO. There is a line in the S1 itself that says, if Adam Neumann is no longer the CEO of this company, you can expect a material adverse effect to this company, or at least one is possible. That's written right there in the S1.
Yeah.
So,
and by the way, it could still be true. I mean, this is a company that he created and got to this point. So sure, its valuation has gone up in smoke over the last couple months, but that could be as much because SoftBank was willing to pay a price that nobody else is willing to pay. And I just want to mention, the information is also reporting that they've discussed with bankers, WeWork has laying off up to a third of the workforce.
Yeah, one of the things bankers has talked to WeWork about now for weeks, if not months, is coming up with ways to slow down your growth rate so that if the company does in fact go public down the road, the expectations are rejiggered. And it also means maybe the company will need less capital because that way it can stay private for longer, maybe doesn't need to raise quite as much private capital. The irony here, of course, is that Masayoshi Son has been a big champion of Adam Neumann's for years. He's sort of the type of guy that Adam would get along with, pushes very hard,
right,
all about expansion, big ideas. So it wouldn't be his choice per se to have Adam step down as CEO, but I think the writing was on the wall with everything that's happened over the past couple months.
Right, and so now, Kate, SoftBank is in the position of needing this company to raise the additional funds through this IPO process. So in other words, the clock is ticking. This is something that everyone is pushing for, that it needs to happen unless they can come up with some other way of covering their pretty high cash burn levels for the next few years.
Right, and even if they go public with this clause, it wouldn't make up for all of the losses. And others have reported that they would have to write down some of those losses. 400 million is nowhere near the amount that SoftBank would lose, or the amount that they put in. They put in, $5 billion in the last round. So it's a miniature protection in the entire scheme of things. Although it's, right, like you said, it's not clear if and when they are going forward with it.
Right. At this point, we've heard maybe still at some point in the next few weeks or months, Alex, but if they're making these changes, it sounds like they're trying to get the company in as good a shape as possible to send it out.
Sources close to SoftBank have told me that they want to make sure this company is right and in order before they go public. So we'll have to see. WeWork has said publicly, we plan on going public this year. And yet SoftBank has said privately, we don't want this company to go public this year. We want to make sure this company is in better shape from a governance standpoint. And this is obviously a huge step.
If they don't go public, though, would SoftBank be able to pony up the additional funds that WeWork?
A, that's a question. And B, there is a loan attached to going public, conditional upon going public, that gives WeWork billions of dollars. that loan would need to be rejiggered. And obviously, would work with JP Morgan and Goldman Sachs in order to revise the terms of that loan if they don't go public this year.